find out what the big guys are doing. Dom Chu out in the newsroom with the 13 Fs. All right, well, it has been 5 years since the start of the recession. Unemployment, yep, it's still bad. Nowhere near the pre-recession lows of 4.4%. It's so painful. And house prices, yes, they are still down, about a third below the peak we saw back in 2007. So, when do you buy? Maybe now, maybe not. Let's try to figure out with two experts, and these guys should know. Taking the bullish side of the debate, the man who called the housing bust a year before it hit, PIMCO portfolio manager Mark Kiesel, and arguing for the Bears, co-founder of the Case-Shiller Home Price Index, Yale professor Robert Shiller. Again, two men who certainly ought to know what we're talking about when it comes to housing. Gentlemen, thanks for being here. Mark, let's start with you. You just bought a house, so how do you feel about the decision?
Well, I feel pretty good. I guess you should probably ask me in 2 years. But, you know, what caused me to finally buy a house after renting for 6 years is that, you know, prices have fallen, as you said, a third. And we look at a lot of facts here at PIMCO, and our teams analyze a lot of data. And the fact is that inventories are coming down. New inventories are at 50-year lows. Existing inventories are only 2.4 million homes. They're down 24%. And the shadow inventory has actually come down 1.4 million. So there's demand out there. And in fact, we're really housing starts are really half of what the long-term average is, and about 500,000 less than long-term household formation. So these inventories are being absorbed, and they're actually being absorbed quite quickly by buyers such as myself, as well as investors that are looking for real assets with very low and negative real interest rates.
Professor, if we look at the chart of the index that you created, lower lows, lower highs, I mean, the trend is still down. Can you speak to what's happening behind the scenes?
Well, what's happening right now is the seasonal. We have a strong seasonal in housing. Every summer, prices go up. So I'm with Mark on the short run. Prices are going to go up for a few months anyway. The other thing is that, now, where's Mark in California?
He is in California, yes.
Yeah, you know, some of those California communities, no offense, Mark, they get a little bubble psychology, and we see a little improvement. And because there's been so many repetitions, California is the worst in terms of repetitions of a bubble psychology. It could be building up in some places, and so where Mark is, maybe he's got a handle on the psychology, and maybe he is right.
Well, I mean, real estate, you know, it's all local at the end of the day, which makes it tough when you're trying to talk about the overall trends here. I mean, you look at New York, Manhattan real estate has done very well, but yet when you look at the rest of the country, I mean, as you just pointed out, we're still off, what, 30%, 33% from highs back in 2007. When you look at the national picture, Bob, do you think it's going to get worse from here, or have we just sort of leveled out and that's where we're going to stay?
Well, I don't have a strong and dramatic forecast. It's been going down for, 5 years, and we see a seasonal uptick. But, as Mark pointed out, there are positive indicators. But there are still lots of concerns. For example, we haven't resolved Fannie and Freddie. They're financing most of our mortgages. We have Europe to worry about. We have an unemployment rate that's not coming down. Confidence has been kind of iffy lately.
So maybe housing goes nowhere?
That is a good scenario, just nowhere. And that's what it's done for most of the last century. Housing has been a dull, boring investment for a long, long time.
But it was safe. I mean, I guess that's the difference, because people have learned as a result of all that happened that housing was no longer the safe investment that would keep pace with inflation.
Right. That's the other thing that's happening is there's some evidence that people are turning away in the long run. I mean, from the whole idea that I need a McMansion in the suburbs. Mm-hmm. And so there is people are renting more. Now, that might be just a cyclical thing, but it might also be a longer-term thing.
Well, as someone who built a very large house, I can tell you I'd rather have a smaller mortgage than a large one. I learned that one firsthand. Let me ask you, Mark Kiesel, because you just have bought a large house. At the end of the day, you got to try to make money, not just on the house that you bought, but on the investments you make for PIMCO. I look at, say, USG up 74%, Mohawk up 22%, Masco up 25%. All the components that go into a house. Have these stocks gotten ahead of themselves?
Well, it's possible the stocks have gotten ahead of themselves. The stocks have run up in anticipation of the demand improvement. We have been basically investing, as you know, in bonds, and we've been buying non-agency mortgages for our clients, which are yielding 5 to 7%. We also were early in buying companies like Weyerhaeuser, which is now benefiting a lot from the demand pickup in lumber. We did buy USG, as you mentioned, wallboard company, and we've held the banks, which have obviously seen their balance sheets improve and capital almost double in the last 4 or 5 years. So PIMCO has definitely participated for our clients in this housing recovery through those types of investments.
You know, let me go back to Bob for a moment, because he's our bear here, and just say, you know, people have got to live somewhere. And when you look at the demographic trends in the U.S., our population continues to grow. How can you be negative on housing long term when people have to live somewhere?
I'm not so negative on housing. We are down, as Mark said, we're down a third. And I'm thinking it could go down further. But I'm not telling people to be panicking right now. You know, if you want a house in the suburbs, if that's what you want, buy it. Because I don't have that clear, and no one has that clear an outlook. But I do think that there may be a shift back to the urban environment.
That's interesting.
And so if you buy in the suburbs, that might not be the favored place.
You've got baby boomers that are looking to retire, that may be trying to unload these large homes in the suburbs. Right. Is that factoring into your thinking?
That's right. I mean, you have to look at the source of long-term demand. Most home buyers are long-term investors. And so traditionally, housing hasn't been thought of as a good long-term investment. You know, it depreciates. You have to add in all the maintenance that you're doing over the year. If you buy a bigger house than you need, you have to weigh those against the... And you know what the long-term increase in home prices in real terms is? It's a fraction of 1% over the last century. It just isn't a performing commodity investment unless you want that.
That's groundbreaking.
So
Only 1% in real
consumption.
terms.
I mean, it sounds like that's sort of what you're saying at the end of the day, when you factor in probably your opportunity costs, when you factor in...
You got to mow the lawn.
You got to mow the lawn. All that costs something. It's consumption.
It's consumption. And I love it. I own a house, and I recommend to people like me to buy them, but not as an investment.
Understood. Professor Bob Shiller of the Case-Shiller Price Index down from Yale. Thanks for being here. Mark Kiesel, proud owner and PIMCO portfolio manager out in California. Gentlemen, thanks as always for being here. Street Smart.